What is up, guys? This is Nick Bentley. It's July 14th. It's 9:45 in the morning, guys. Today, I want to talk to you about patience and about probabilities, okay? So what I have up here right now is the Micro E-mini Dow futures. And if I look at the flexible grid, let me add a little bit more time here. Sorry about that. Should have had this set up before I started. But I want to get this set for 9:35. So let me set this bar to 0. And basically everything is about as weak or as strong as the other market. There's not a lot of difference there. A lot of them are flat. So I'll start with saying I think it's important to buy strength. I think it's important to sell weakness. But I also think it's important to understand what the technicals are telling you and why I'm not willing to take this long right now, okay? So on a 4-hour chart, guys, whenever I start doing reviews, I always look at a 4-hour chart. I see this drop-based rally. It's kind of a one candle out. It doesn't really breach this high right here, but it's definitely a turning point that occurred on Wednesday. You can see the date up here on Wednesday, June 22nd. And as I dive into that just a bit more, on the 1-hour chart, what I can see is as we come into this level, all right, we're gonna have this drop-based rally pull back in, and on the 1-hour we are able to breach this and we come in. But guys, we are at a 23.24 right now on the RSI, and what I would much rather do is when I'm looking at trend, I can see that we are kind of on the low end curve of the middle right now. And so when you're we call it diddling in the middle. When you're diddling in the middle of a curve, it's really, really important to make sure that you abide by your rules. And one of the rules that we have here is that if we are diddling in the middle, that we should not take this trade. I understand that it's a decent area, but here's what I would prefer to do. So not only why I wouldn't take this, we are way too low on here for me to take this area, and it looks like it wasn't very fresh on a 4-hour, and you can see inside of this 1-hour, it looks even a little bit less. Here's what I would prefer to do though, guys. I would prefer to take this short right here in a base drop that is at a point of buying pressure before that clears out 1, 2, 3, 4 areas before we run into the bottom of this curve. So what I'm going to do here is I'm going to set an alert, and that way I know when price comes at or above this area. And what we can do is we can just wait, because the odds suggest when we're this weak into the bottom of a curve, we may catch a bounce, but we're unlikely to create any new highs. So I'd much rather be a seller here than being a buyer where price is currently at. I'd much rather sell in this area than be a buyer in this area because of momentum, because of trend, because of curve, and because of all of the other stacking the odds studies that we talk about inside of trading price. So guys, hopefully this helps you. And honestly, after yesterday's inflation print, which came out, I think at 9.1%, which is the highest it's been since the early 80s. Like I think 1981 was the date. Lots and lots of movements. This is the back end of that inflation print. We were up on the day, we came screaming down, we retraced a bunch of that, and now we're just heading down. So with all of that momentum in a downward fashion, I really got to be careful buying. I realize we're getting a bounce from this area right now, but I would much rather prefer to take a higher probability short, reducing my risk. One of the things we all talk about here is, yes, we love profits, but I also love to not eliminate, because you can never eliminate risk, but I love to reduce my risk. So hopefully we get a bounce, and hopefully we come back into this area where traders like you and I can take advantage of trend, momentum, and things of that nature, and potentially be a seller here. So guys, with that, take it easy. Hopefully you enjoyed this teachable moment, but that is why all of those things matter. is it's about reducing risk as much as possible when you trade. All right, guys, take it easy. Here is what happened. So after our teachable moment several hours ago, we had price come back into our drop on the Dow. We are at 43 on the RSI, and don't really see anything that is convincing me that we're gonna move up in price from here. So I know I explained a lot in the previous video, but let's see what happens from here on out. All right, guys, here's just a follow-up to what I was just talking about, a bounce off of this 4-hour area here that we have on the MYM into our 30-minute area. And guys, I did get short here, and so we come in, we're below 60. This is a very low risk trade. We just reached halfway to our first target, and so what we're going to do is we're going to come in here and we're going to put in our stop at halfway. And guys, now we got a free trade, and this is what I would prefer to do on this type of situation than getting long down here in the 4-hour, where we're entering into a 4-hour area well below 40 on the RSI. We're in a downtrend. We have lower highs and lower lows in price on the bottom of this curve, and when we bounce back up, we're right into a rally base drop area. And as soon as we get into our halfway to our first target, guys, now it's a free trade. It cost me nothing to get into this trade right now, and so we will sit here and see what happens with price. All right, guys, so now that we've hit T1 on MYM, we've taken $65 in risk here, and we've guaranteed ourselves, I don't know what that comes out to be, about a $200 profit no matter what happens. So we've already reached our 3-to-1 target here. And guys, that's really the key that we use here at Trading Price, is making sure that we're able to limit our risk and execute on our trades following our rules. And guys, everything is really about, the account size and the position. So we've got multiple accounts here, and we only took a very small trade here on the MYM, but I'm gonna show you kind of what I'm thinking here about where my current targets are at. So we have this 4-hour level, right? Where we have this drop base rally. It's not the best. This is why we didn't get long here. It's the reason in the beginning of the video why I told you why I wasn't willing to get long, and I would much rather prefer to get short. We did get short here. We did hit T1, and now what I'm doing is I am protecting my profits. I've got 2 contracts left, and what I see as I see price turn inside of this 4-hour level, and so I'm going to take my last contract here, and I'm going to be super aggressive here with my targets, and I'm going to move this using an 8-and-81 strategy. And you guys, it depending again on the account size and on how you want to do this, you can implement your 8-and-81 strategy, but I typically don't do it until we hit T2. But we are in that 4-hour area, so I'm just going to be a little bit more conservative here and lock in, my $260 or $270 for a $65 risk if price does come back up here. I expect it to fall, but it might not. I have no idea what's going to happen with price. RSI is in our favor. We got a good level and a downtrend. All of those things are with us. All we have is this 4-hour area that price bounced from right back in here, and we're heading low. What I do want to look at is on this 4-hour area, as we bounce, guys, we're super weak, 32. So the likelihood of us continuing down is high. But when you're in a trade, you've got to consider A, the account size, and B, where supply and demand exists once you're in the trade. So, oops, I went to a 15, I went to go to a 30. And so that's what we're gonna do. We're gonna lock in $250, $260 on this trade, taking a $65 risk, and hopefully it comes down. If it does, we're gonna get stopped out before there. And after that, if we do hit this target, what I'm gonna do is I'm gonna set an alert here. And if we do come below this, I'll probably implement just a trailing stop strategy, on the last remaining contract. So I'll be back and let you guys know what happens with the trade. All right, guys, welcome back in this final little section of our micro Dow trade, where we caught a bid up from a 4-hour long ago level on June 22nd. We were below 40, and what we were suggesting was that we would prefer to get short, and we did get short up here and price came back down. However, we are catching a bid later in the day. So essentially the end of the trade was we took a $65 risk. We made 220 bucks on the day, hitting T1 and moving our stops accordingly based on our rules. And guys, I don't know which direction price is going to go when we enter into an area. I can tell you the odds of a turning point that we are expected to have. I can tell the likelihood that we're about to hit our first target. But if price wants to turn on us, that's fine. I'm not stressing out about that. Risking $65 and making 220, I'll take that all day long. This is what we do inside of our inner circle with all of our members, is these types of trades where we just put the odds in our favor, entering into trades that are highly probable of changing direction based on trend, based on RSI, based on all of our 5 stacking the odds studies and our 7 level odds enhancers. And guys, right now we're exiting the trade at a 3-to-1 on the day, and that is what we're going to consider a win. So hopefully you guys can see a little bit of how this may work out. Easily, price could have gone below here based on the momentum, and that would have obviously resulted in a better P&L, but nonetheless, our risk to reward ratio on this trade is something that I would take every day, and that any trader would take every single day. All right, guys, take it easy. So guys, before I killed this video, I had to come back on and record this last little section. I just want you to take a look at price since we've exited, getting short here, using all of the strategies that you guys learned in the last 12 minutes or so of this video. But look at what happened with price. We screamed north above this area. And so while this was a very high probability trade, again, guys, I don't know what direction price is gonna go. And we came into a so-so area on a 4-hour chart in a downtrend on the bottom of the curve with weak momentum, and yet price still rallies. So we take a high probability trade, but I don't know what way price is gonna go. All we can do is stack the odds in our favor. That's what we do here. And we did that by moving our stops. I showed you guys all of that along the way, taking about 200 points on T1, and then obviously moving our stops and things of that nature. But there goes price, right? There goes price north. So good thing that we got out and we followed our rules. And guys, with that is what high probability trading is about. That is one little example of what high probability trading is about, is understanding the risk, reducing your risk, taking high probability trades, but without the expectation or without the certainty that price is gonna go in your direction, and just using the probabilities and moving your stops based on what your experience tells you need to do. With that, guys, we have a profitable trade at a 3.5, I guess, reward to risk ratio, and that wraps up today's video. All right, guys, take it easy.